Welcome back to Instables, everyone. Again, going over our intraday swing and long perspective as we're leading into this Wednesday CPI. Again, our prior CPI increasing after multiple CPIs before that have been decreasing. So this CPI will be either a follow through on increases in CPI or will be a possible decrease in CPI and give us a possible major rally. Again, this will be anticipation into our next Fed rate hike if we will possibly have more tightening to come. And again, the reason why a lot of people are worried is because we recently had these bank runs. If these bank runs are causing increases in CPI, then we will see that come out on Wednesday. I'm going to go over exactly what we're looking for from here. Hit the like button if you enjoy, subscribe if you are new to the channel, and if you are a day trader, if you want to see pre-market news that you want to be watching, if you're looking for data sets that you want to be watching, for example, 30 minutes before market open, the market very much does react to certain data sets and you didn't know that they were coming out, or 30 minutes after market open if you guys are trading out the gate movers, or just looking for those major volatile breakouts on news that we mention every single day in the Instables room, go to instables.com in the description below. And for only $15 a month, you will never miss a breakout alert today. Again, let's jump into this one. So jumping into the SPY with you guys here, looking at our intraday perspective off the bat, again, looking at our daily candle structure so we can anticipate what we're looking for leading into tomorrow and Wednesday as we do look for proof of concept on the upper end of our 20-day moving average. Again, curling up here, looking to see if we can cross above our 50. Typically, when you do get your 20-day crossing above your 50, you typically do look for that possible bullish candle setup, and bouncing off of our 20-day will be that clean candle structure to the upside, possibly again a possible pullback, possible engulfing candle, or you could get a possible Morningstar setup bouncing off of our 20-day, possible pullback here, possible doji candle, and following through with the body above our prior body's candle for that Morningstar setup bouncing off of our 20-day. That is that possible bullish candle setup. That's one of many. Again, a possible engulfing candle as well. Again, covering our prior day's body candle bouncing off of our 20-day would be that confirmation on that nice intraday momentum. But again, that resistance that we would be looking at from here would be here at 416. Again, our prior rejection and our prior balance that we have been consolidating within is exactly what we are looking to see if we can continue on past. So in my opinion, if we do continue on and we do bounce off of our 20-day, then we would be looking for that continuation on above our 416 level from there. So again, that is the watch. And if we do continue on above 416, our next largest resistance here is at 426, our major rejection that we had from a bounce. That will be our continuation on higher if we do get past that. And the reason why is because we have prior gap downs here that gives us room to run to the upside. So if we continue on past 416 and we continue on past 426, then we can assume that we can have a gap up to about 436, 440. So again, that will be if we get a possible bullish CPI, possible bullish Fed minutes, and we do continue on with that anticipation on a possible Fed cut. That will be exactly where we do head. However, if we do price in a possible increase in CPI, again, with those recent bank runs that we've been getting, that's what many investors are anticipating, is that if we get an increase in CPI coming into this Wednesday, then that could show that these banks are more of a big deal than we do realize. And that will be shown here if we do get our 20-day crossing down back below our 50 on a possible bearish candle setup to the downside. So again, either way, we will be looking for that confirmation. We will know exactly what happens, but again, very much looking at what our next CPI will come out as, because again, our prior CPI was an increase for the first time that we have not gotten in multiple CPIs. Now, looking at our weekly chart, again, we have been keeping an eye on this multiple weeks now. Again, getting a sell-off below our 20 and our 50 weekly moving average, mentioning that we did not get our bearish candle setup to the downside yet. We had a bounce. We were looking to see if we could continue on with that bounce, and we did continue on with that bounce, bouncing back above our 20-day, and now possibly flagging here if we continue on with this strength. Although leading into CPI, we very much still have to be cautious, very much cautious to the downside, but in my opinion, very much looking for proof of concept to the upside. So very much looking to see exactly how this candle will close. This is turning into a momentum candle at this point in time, but has not finished this candle on the week. So we're going to see exactly how this candle closes if we continue to respect our 20 weekly moving average to the upside, since again, we have not had our 20 weekly moving average crossing above our 50 weekly moving average since the last year of trading. So again, that's why we've been looking for that possible continuation on momentum, on that swing term momentum. So again, we will look for that proof of concept on the daily chart, which will give us that possible bullish candle structure here on the weekly chart, since we have our 20 weekly moving average above our 50 weekly moving average. Now, looking on the monthly chart, looking at our long perspective, again, this candle is still closing as well. We are very much testing our 20-month moving average. And if we do get a rejection, for example, we get a major sell-off with CPI or possible major bearish Fed minutes, then we will chalk this up as a rejection, possibly on our 20-month moving average like we had prior, for more possible sell-offs to come. However, as we test our 20-month moving average looking for that possible Fed cut, we are looking to see if we can possibly close above our 20-month moving average to get that proof of concept on our long-term momentum. So again, till we get that proof of concept on our weekly chart, we will not get that major long-term move. However, one thing I will mention that we have not had in quite a while is our 12 EMA starting to curl up here. We have not had this happen as strong for quite a while. Again, we have not had quite the curl here. We are not crossing above our 26 EMA quite yet. However, we are looking to see if we can cross above our 26 EMA since we are curling. So again, that's why we are on watch for that possible long-term bullish move here as we are looking for proof of concept on the weekly chart. Now back to the daily chart to recap on our intraday perspective, very much looking to see how this week closes. Will we close our 20-day moving average above our 50? This is what we're watching out for, in my opinion, very much close to crossing higher here. We will look for that proof of concept to make sure we do not get a false break from our prior balance that we had. And again, that will be that clean and very nice run to the upside if we do get that proof of concept. Now, again, with that said, if you are a day trader, if you're looking for pre-market news before market open, major volatile movers, major data sets that you want to be watching, for example, again, CPI coming out on Wednesday, Fed minutes coming out on Wednesday, any major data sets that you want to be watching. Again, we mentioned anything you want to be watching 2.5 hours before market open, as that has been most of the runners. Again, for only $15 a month, go to instables.com in the description below, and you will never miss a breakout alert the day again. And again, all of you instables, it will be very interesting to see exactly what Wednesday CPI comes out as after getting an increase in CPI that we didn't exactly expect, but again, not exactly below expectations prior. We'll see exactly what this one comes out as. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.